What's up, guys? Welcome back to DCA. So what we're going to do today is take a look at Bitcoin's price action. If you've been watching the channel recently, you'll know that we've been talking about a lot of metrics which quite frankly have been rather bearish on Bitcoin and the cryptocurrency asset class as a whole. So we've looked at things like users on the network, which have been declining over the last several months. In fact, quite frankly, they've been declining ever since about January. We've looked at things like price volume, which show how many dollars are being transacted on Bitcoin per day, and that's been decreasing over time. And that is, in general, a bearish sign. But today, what we're going to do is consider other ways of looking at Bitcoin, because it's a bit disingenuous to say that everything looks bearish at the moment. So when you're analyzing an asset, it's easy to develop a bias. And what do I mean by that? I mean that, it's easy to say that these metrics right here, this, and this, appear to be bearish. So therefore, you sort of start to ignore other things that may be bullish. And that's why today I want to consider the opposite side of the coin, as to not develop a particular bias. Because when you're developing a bias, you're essentially saying that you're ignoring certain aspects of the data which may tell a different story than whatever you have decided upon. So we're going to look at that today. And in my recent discussion with Upside Down Data, they sort of talked about the fact that, if you just look at the technical analysis side of the coin, what we're seeing is a place where Bitcoin is making higher lows. So back here in June, and then later in July, and then we saw a higher low in January, and then a new one recently in February. In addition to that, we have higher highs forming. So February, March, here in April, then again in October, and finally in November. So anytime you're within a market cycle, you'll have natural oscillations up to an upper limit and then down to the lower limit. If you're bullish on the market at the moment, you could certainly make the case that that's exactly what we're seeing right now, is nothing but a natural oscillation of the price within a given market cycle. So heading up to an upper band, down to the lower band, and then back up again. And you could easily contend that that's what we're seeing again right now. So today, let's explore that. Let's talk about the fact that Bitcoin is currently technically in an uptrend. And we're going to look at both sides of the coin. And then, like I always say, I don't know exactly what the price will do. All we can do is lay out the data and let you make up your mind as to what you think it's going to do. Personally, what I do is dollar cost average every Friday, and I talk about it all the time. This removes the emotion, this removes the uncertainty, it removes the fear of being in a downtrend, because I know that I'm in the asset for the long term. So I'm merely dollar cost averaging using the DCA index risk model. Now, if you don't know what this model is, it's a machine learning algorithm model that I developed, which helps you to identify when a market cycle peak occurs. It also helps to identify when market cycle bottoms occur. So if we just scroll out for a moment and we'll just back up and take a look at a longer price history for Bitcoin. So notice that the DCA index risk model goes into these 80 up to 100 bands anytime that we're approaching a market cycle peak. It also heads into these lower bands anytime that we're near a market cycle bottom. In fact, if you look right now, we're down at some of the lowest levels we've ever been at. So that would sort of indicate or sort of support the idea that while we may be in a bear market at the moment, we've seen in the past that when you get down to these levels that we're at right now, we're very close to approaching a market turnaround. So it's possible to be both in a bearish segment of a market cycle, but still be in an overall uptrend within that more bearish portion of the market cycle. Okay, so what we're saying here is right now, we are at a very low point on the DCA index risk model. And historically, these have been some of the, let's just take a look at other times when we've been down in this lowest or second lowest band. So that would have been the COVID capitulation event. And just imagine that you bought at any of these times. It would be down here in early 2019 when the price had just dropped from around $6,000 after forming this descending wedge for about a year. It dropped down into this level, and that's when we were down at this, in this second lowest risk tier. And then the only other time you ever saw that was all the way back here when we were very close to the end of the bear market back in 2014 heading into 2015. So you still had some time that you were going to be trending downwards. But if you were buying, if you were dollar cost averaging into the market at these times, they were quite simply put the very best times to be buying at each point respectively in all of Bitcoin's history. So if you bought at any of these times back here, you were looking at something like 10,000% upside. If you bought here into this cycle, you were looking at something like 2,000% upside. Okay. And then, the other time would have been at the COVID capitulation event. If you would have bought there, you were looking at something like 1,200% upside. So the argument is being made by the bulls that we are in an uptrend. And let's be more specific. So the bulls would say then that we were making higher highs all throughout the earlier stages of the bull market. So, back in January, we're talking 41K, then into February, 57K, all the way up to 64K in April. Then we obviously had May occur. So Elon Musk, China ban leads us into this massive capitulation event, and we make this first low. So in June, we got all the way down to a low of, if we just go right here, around 28.8K. Then in July, we had a low of around 29.5K, and that's where the turnaround started. So then continuing on with the lows, we'll talk about the rest of the highs in a moment. We hit 33K here in January, and then recently 34K. So each one of these has been higher than the prior. And that's the key element you need in order to say that you're not violating the trend line. And then conversely, on the top side of the market, we've seen all the way up here so we made our high at around 66K, and then a new higher high at around 69K. So this has just continued. So what is the evidence that we've been using to say that, this appears like a bear market in spite of the fact that the price has been going up? Well, first things first, we've been doing nothing but trending down ever since November. So we've essentially had, 4 months of straight down action. Nothing but down. Okay? That's the obvious sign. Now, let's take a look at some of the on-chain metrics that we've been talking about. And this is the active addresses on the network. So these are addresses that are transacting on the network. And we're going back to 2018 here. So this is the actual addresses rather than the price. But you can see that it closely resembles the price action of Bitcoin. So this is the peak in 2018 right here when we hit 20K. And notice how the active addresses just absolutely exploded in 2018. But it was very short-lived. And what we've seen in this market cycle is instead of exploding upwards, we've just sort of had a solid upward growth path, which is a more healthy and more stable growth path, it could be argued. Now, there's two things to look at here. So this is what 2018, right at the peak, if we just look right here. Okay, so this is the peak. And then what did we do after that? Well, from there, we just had this massive price drop. Okay. So we had this massive price drop into April of 2018, and then we started growing the users on the network again. And this growth path has just continued slowly ever since that time. So we've grown all the way up to our peak, so almost a parabolic spike that we had in January and then through April until we crashed again, right? And we crashed at the capitulation when Elon Musk announced Tesla's no longer accepting Bitcoin, when China banned crypto, we crashed. But then what have we been doing since then is slowly recovering. But now notice ever since November, again, we've kind of been slowly descending downwards. And we've been maintaining that this is a more bearish sign. But what can we also say though? And let's just zoom out here. Let's zoom out and take a look at this. And if you look right here, we're coming out of 2013 into 2014, 2015 here. We've been just on this basically a solid upward growth path ever since 2015. Now, this is why I kind of have even said before that Bitcoin's really never had a bull or a bear market. It's never had a bear market. We've only had a bull market with the exception of parabolic peaks being added on top of the bull market. So Bitcoin has only ever been going up. Crypto has only ever been going up. But it's been accompanied with these sort of hysteria phases where retail market comes flooding in. So just imagine that we didn't have any of these parabolic peaks. And let's just draw a curved line here. So you can see that Bitcoin has basically, if you just removed these, it's basically just been climbing upwards at a steady rate ever since it has existed. The only deviation it has made from this upward path is these massive retail FOMO segments of the market. So here in 2013, here in 2018, 2017, and then here in 21, and now into 2022. So Bitcoin's never really seen a true bear market, which violates this general upwards path. We've only ever essentially seen an upward trend. And then if you take a look at, where we're at right now in relation to this general upward trend that we've seen, we're pretty much, approaching the bottom of it. So it could be said that we may expect Bitcoin to sort of head down a little bit more, or even turn around right now and head back up, because we're doing nothing but sort of bouncing off of the natural place that we have been extending along ever since Bitcoin's inception. So I think there's definitely a case to be made for that. And, I've shown a lot of metrics, including this metric that we just talked about, the fact that the users on the network have been trending down ever since dating back to January. Users on the network have been trending down. But realistically, they're trending down in the local segments of the market, in this local bull market that we've seen. But overall, they're still trending up. We haven't really violated this fact that we're trending up over time on the longer scale. And that's why, there's a lot of utility in sort of just zooming out. When you zoom out, you can really get the big picture. When you look at longer term time frames, you can see that in spite of the price in the short term looking bearish, the price of Bitcoin in the longer term time frames still looks extraordinarily bullish. So let's just do that. Let's take a look at the 1 week time frame. So on the 1 week time frame, you can see it becomes very clear, right, that Bitcoin is just moving nicely along this logarithmic growth path upward with very little deviation from it. In fact, the only time that we've ever really gone below this imaginary line that we're drawing right here would be the COVID capitulation event. And we all know that that was just sort of a panic phase. This lasted for just a few weeks. So we went down essentially in one strike, we went down, and then we were immediately on our way back up and right back onto this curve. So while things may look bearish in the short term, and that's even debatable whether they will continue to be bearish or not, in the long term, Bitcoin continues to look like exactly what it's always looked like, and that is a high growth, high potential, high upside asset that's merely oscillating up and down between its more parabolic phases of the cycle and back to its standard long-term upwards growth trend. There are metrics which show that Bitcoin is bearish at the moment, but overall, Bitcoin remains completely healthy as an asset, demonstrating the same type of growth. This is the active users on the network again, demonstrating the same type of growth in users on the network, growth in its price, growth in essentially all major metrics in the longer term timeframes that you would expect to see in an asset which is gaining adoption by both retail and institutional investors over time. So that's kind of where I'm at the moment, guys. Now, like I said, I'm in general more bearish in the shorter term timeframes, but there's a case to be made which even says that in the shorter term timeframes, we are at a point where we're very likely to head up from here. So it's important to sort of remove your biases that you have from your decision-making process and sort of understand the asset from multiple perspectives. And that way you're prepared regardless of what the outcome is. It's very difficult to predict Bitcoin in the short term, but what we can do is look at a spectrum of different metrics which show us different facets of the investment and let us sort of make better decisions that way. Because in general, when you decide something's going to happen, you become blinded to the information overall, and it becomes very difficult to think clearly, to act clearly, and to act unemotionally. So that's what leads to panic selling, it's what leads to FOMO, and that's what leads to losing money in the long term. Which is sort of why I always suggest dollar cost averaging, because it allows you to step back, not really concern yourself with what's happening, just you have a strategy in place and you're just going to stick to that strategy regardless of whether the price is at 69K or whether the price is down here at 32K. It doesn't really matter because you have a strategy in place and you're going to stick to it. So that's going to remove all of the emotions, and it's just going to make you a better, more profitable investor in the long term. So that's going to be it for this one, guys. Until next time, as usual, see you.